but I'll just get the management in first to give us some commentary. It's the first corporate on our radar. Very strong numbers, actually. The Q4 revenues and EBITDA saw healthy growth, while volumes in both domestic and exports witnessed good growth this time. Naresh Jalan, the MD at Ramkrishna Forgings, joins us now. Mr. Jalan, good morning and thank you for being with us on the channel. In FY23, you ended with revenue growth of over 30%, very strong indeed. But can you give us a sense of what FY24 could look like? Can you replicate this performance?
Morning, Sonia. I think what we are looking for in FY24 is a very strong market, and we expect to have at least 10 to 15% volume growth. Raw material pricing is still not factored in, so it will go as it moves on. But we expect at least 10 to 15% volume growth.
So that will be around 150,000 tons at least? 150,
yes,
155,000?
Yes.
So you're expanding capacity in any case, right? You said that the capacity will go up to about almost 2.4 lakh tons. That is by September of this year?
We have given a complete roadmap of first quarter and second quarter. And that's basically on a warm and cold forging side. And the entire capacity of new 55,000 tons is going to come in by September end. So second half of the year should see more. Right now, 10 to 15% volume growth is from the expected and established lines already in the organization. And these new capacities which are coming in, we expect second half the volumes to ramp up from these lines.
So your installed capacity is about 1.9 lakh tons right now. It'll go up to about 2.4 lakh tons by the end of the year, broadly.
Yes, broadly. Yes,
no,
correct.
but sir, could you clarify then on the volumes front? If you're from the existing capacity that you have, it will be a 10 to 15%. So we're already at around 158 to around 155,000. Then you'll be having more capacity that's coming on stream. So put together the two, should we be in the vicinity of around 160, 170 or more? We would like to know it as an entity on the whole, the existing capacity plus what's coming on stream.
With the existing capacity, we are expecting to do a tonnage of close to 150 plus tonnage this year in FY24. And from the capacities which are coming up, the next 50,000 tons which is going to get installed, I think we will see as the capacity gets established, and then we would like to comment on what volume we can expect from that in this year, because that will go through customer approvals and field approvals. So that's a new technology which we are bringing in cold and warm forging. So we expect some more approvals and timelines to be taken from that. So we are right now not building in any volume in this year from that line.
Right. That's 50,000 tons, I think, not 5,000 tons. The flashes will correct that. Now, sir, just a quick point. So we'll wait for the how much you'd sell out of the new capacity, but you already have given a overarching number, right, in terms of revenues. You said your revenues should go up to 5,000 crores. FY23 revenues were around 3,000 crores. So you're saying you go up to 5,000 crores after by when? Can you give us some timelines?
We are looking at FY25 as 5,000 crores top line for the company with all these installed capacities in place.
Okay, so FY25, you're going to hit 5,000 crores in terms of a top line compared to 3,000 crores currently. Got that. The other thing is, your realizations per ton have gone up about 10.5% in FY23. You're sitting at a little under 2 lakh rupees per MT. Can you tell us what is the expectation in FY24? Do you have the additional levers to go up further in realizations? If yes, what would the ballpark look like?
We are looking at 210,000 or 215,000 realization based on whatever value engineering or value addition we are doing in components. We have almost stopped selling as forged components. We are completely moving to 100% of our components and fully finished, ready to use for vehicles. So that's the reason the realization is moving up, and we are expecting at least another 10 to 15,000 rupees per ton realization to go up within this year.
Okay, so 10 to 15,000 rupees realizations will go up this year, and you're saying it will improve to 2.15 lakh rupees per MT by the end of FY24. Got that? I wanted to understand,
Yes.
this recent order that you got from with the Titagar Wagons in consortium with them from the Indian Railways. The total order size is about 12,200 crores. But can you tell us about the execution timelines in FY24, FY25? How much do you think you can execute? How much could come through in terms of earnings for you?
No, nothing is Sonia in next 2 years. I think FY26 last quarter, we believe the production is going to start. And the railway order is only 40% of the installed capacity which we are putting up. We are putting up a plant for manufacturing of close to around 220,000 wheels a year. So 80,000 pieces of wheels are going to be bought by Indian Railways in a guaranteed order. And balance, we feel that we can sell it in the domestic as well as export markets going forward. So first production batch of 500 wheels, we expect to happen in the last quarter of FY26.
All right. Very quickly then, Mr. Jalan, let's wind this down. Revenue growth last year was around 30% approximately. For this year, taking everything into account, what you said, volumes, realizations, what kind of a revenue growth you're looking at? Margins are currently at around 22%. So where does that number move? And debt has come down. Net debt has come down to around 1,100 crores. What is the reduction you have planned for this year? FY24 numbers is what we're looking at. Very quickly, sir.
The debt number, we are looking at another 100 to 150 crores going down. With the performance going up, we are looking at close to 100 to 150 crores in this year. But in terms of top line, it's raw material pricing is right now fluctuating. So we would not like to comment on what can be expected top line, but we expect margins to be very stable or improve from here on. And debt numbers, we are looking at completely running down on the debt, and I think at least 100 to 150 crores debt reduction over this FY24.
All right. And margins will be around this 20 to 23% level, right? You'll maintain it.
I think it's going to improve from here on. We are able to maintain our margins for the whole year. And so I think we are looking at least improvement from what we have achieved this year.
So earlier you had said you'll become net debt free by FY25 end. You hold on to that target?
I think that we were wanting to raise a QIP at that period of time. With the QIP funds, we were looking at it. But 1 year plus minus, I think by FY25, what we are looking at is having a debt below 1 time EBITDA. So I think after that, it may be the amount of free cash flow which we are generating right now, maybe another year or so, we should be net debt free.
All right, we'll leave it there. Thank you very much for joining us, and good conversation on the numbers. The numbers are looking good, and there's a big step up in earnings coming, revenues, and of course, consequently, earnings coming in FY25 once all of the new capacity is utilized. We'll take a very quick break here. We'll be back with Mitesh and Sudarshan, who will join in for some technical trading ideas. Stay tuned.